Good evening, traders. Are you ready to learn the new roadmap for day traders? Tonight we have John Carter, David Starr, and Henry Gambell talking about how the key to consistency in this violent, choppy market is knowing where the tradable levels are. They will be introducing all the new micro voodoo lines and showing you how they can help predict tradable levels with astonishing accuracy. Before we dive in, let's take care of some housekeeping. Throughout the webinar, you may notice interactive features such as polls and offers popping up on your screen. Tonight there will be 3 questions during the webinar, and if you answer all 3 of them, you will be in the running for a drawing of one of 5 $100 gift cards to the Simpler Trading store that will be done at the end of the presentation. And don't forget, we have a Q&A tab where you can ask questions that will be answered by our expert moderator team as well as John, David, and Henry at the end of the presentation. To help you get the most out of tonight's presentation, we've also added some handy features to optimize your viewing experience. You can minimize the chat section with just a click, and you can maximize the video by hovering over it and clicking Enter Full Screen. So sit back, relax, and get ready to learn all about the micro voodoo lines. John, David, and Henry, please take it away.
All right, awesome. Thank you, Daryl. Always love your intros. They're very calming, especially on when you have crazy nights like this, when it's like, wow, we got some really cool stuff to share with everyone, and we're excited to do so. And hey, everybody that's joined, I'm always curious when we start is kind of like where's everybody logged in from tonight? I know we'll probably have somebody like 5 miles from where I am right now in Austin, and then typically there's people halfway across the world and stuff like that too. So it's always fascinating just to kind of see. So we got Colorado, a couple of other places like that. That's pretty awesome. Vegas, Midland. Ah, yes, Midland. Fort Lauderdale, Emory, a lot of Texas. We got some Ohio in the house, Cleveland, Huntsville, Australia. Nice. I know it was a horrible accent. I'm sorry. Minneapolis. I spent 2 years at Shoreview. Got some minus 60 below wind chills there. Almost broke up my marriage. First webinar. Nice. Welcome. New York City. I love visiting that city. I know that probably sounds odd. Philly. We got Mississippi. Argentina. Very cool. Nice 12-hour flight from Marble Falls. Yeah, you're pretty close. You're in the neighborhood. Well, very cool. Well, welcome everybody. So we're here to talk trading, and we're going to talk we're just going to talk about, typically when we're doing a webinar like this, it's because there's dynamics in the market that have happened and that have changed, and we just want to kind of show a couple of things. And so I'm here tonight with Henry and David, and we're going to be kind of talking about collectively a tool. Well, we'll just kind of dive into it. So Chicago, that's nice. Oh, Leander, you might be right down the road from Henry. Hey, Jim, Columbus, Ohio. Pakistan, that's awesome. I love that. One of the things that's really cool about trading, so when I finished my first edition of Mastering the Trade, this was back in 2005, which I can't believe now it seems like it should be like 8 years ago, but it's not. So for about 3 years, I worked with at the time, the Chicago Board of Trade, and then while I was working with them, they kind of got bought by the CME. But what was interesting about this, and this is like a really weird how it happened, but I think this is always the power of I don't know, goal setting, or I don't know, whatever you want to call it, manifesting. So at the time that I was writing Mastering the Trade, I also discovered the author James Clavell, and I was reading this book called Shogun, and then I read Taipan, Noble House, and then King Rat, and this was all based on true Asian history. And after I read it, I was like, oh my God, I've got to visit Tokyo. I've got to visit, Hong Kong. I've got to visit Singapore. I've got to visit all the places that were talked about in this book. Lo and behold, I start working with the Chicago Board of Trade. And while they can talk about their trading contracts, because at the time I was trading gold futures, mini Dow futures, and they can sit in front of an audience and talk about the specs of a contract. Well, this is what it is, and this is how many points, and blah, blah, blah. It's illegal for them to talk about strategy. However, since I don't work for them, I could talk about strategy. So for 3 years, I flew all over Europe, Asia, and of course that was while they were still private. So it was first class, 5-star hotels, Hong Kong, Singapore, Taipei, Beijing, Mumbai, Delhi, Shenzhen. I mean, the list goes on and on and on. It's like this amazing experience. And the reason I'm bringing this up is that while the global headlines are always going to be like, oh my God, it's, Russia versus the US or the US versus China, when you go and you meet people and you meet real people, like not government officials, everybody has the same goals. They're trying to get freedom from they're trying to get independence. They're trying to, make sure that their kids have a good shot at life. And a lot of that has to do. So when talking to traders, no matter what the country was from, whether Republican or Democrat, whether they're from Pakistan or China or Russia or whatever, you're talking to real people that have, real families with real goals, and all that other crap didn't matter. So I always love that about trading, because I think it's the great equalizer in front of all that. So that being said, let's go ahead and dive into this. And I think, so I was got a question for you guys too. We may end up turning off our webcams here if you guys can't see the slides. We weren't sure. I mean, you don't necessarily need to see us for this, but we'll talk about a couple of things here. And if we need to kill the webcams, we will. Were you married yet? So I was kind of newly married. No, we had been married for a little bit then. And she came with me for a couple of trips, but then we really want to take our kids to Asia. We've never taken them, so that'll be that. All right, so what is going on with the current markets? And so you guys may have noticed that while the news right now sounds like 2008 and Armageddon, the markets are kind of choppy and they're actually kind of going up. So what's going on? And I've seen a lot of fear in this market, especially with Silicon Valley Bank going under. I had so many people that were reaching out going like, oh my God, is this it? Is this the end of the world? And I'm like, no, it's not. This is all kind of normal for this time. And if there's anything, and by the way, we are going to have another 2008. And if you understand that, it's an opportunity. It's nothing to be scared of, but it's like 3 or 4 years down the line. And that's a whole other story. We're kind of in the late 2004 inning of that whole cycle. So there's plenty of opportunity. And by the way, when that kind of stuff happens, there's opportunity there as well. But for now, there's a lot of people betting on Armageddon, and they're going to get their asses handed to them. And there's a lot of volatile chop in this market where, what it comes down to is uncertainty. And typically what happens is when people are uncertain, they start doing stupid things. And what we want to do as a trader is, no matter what's happening in the markets, we want to do smart things that extract money from the markets and put it in our pockets, right? And so, so to that end, if you've noticed what the markets are doing right now, the markets have had a very wide trading range. Literally, I think there was a capitulation in June of 2022, and that seems like it's like at this point that was almost a year ago, right? And the reason I say that is that was a week where the S&Ps fell the second most of the most that they've ever fallen in the course of a week. That's what capitulation looks like. And since then, it's just been choppity chop, chop, chop. So we've essentially been in a wide trading range since June of 2022. And the Fed has gone from extremely hawkish, we got to fight inflation, to now we got the public wondering, are they going to crater the entire banking system? Is your money safe in the bank? And that's got people scared. But look, the markets aren't crashing. Why? Because we have a strong economy. We have a strong labor market, right? There was, inflation. Inflation is not a horrible, hyperinflation is bad, but some inflation actually isn't too bad. But as usual, the Fed tends to undercorrect on the downside. They let QE go on too long, and now they're probably going to overcorrect, and they're going to have QT, quantitative tightening, go a little too much. And we just got to do our best to work that out. So the issue is there's a lot of mixed messages. And so one day the markets are up and one day the markets are down. And I've identified a couple of extremely frustrating patterns that we want to talk about tonight. But literally we're in a situation where no one knows what's going to happen next. I mean, that's just the way it is. And that's okay. Trading a lot of times is like you're in the ocean. I like to body surf, and I've been trying to learn how to kite surf, which is harder, but I love to body surf. And the idea is like you never know what's coming at you, and first of all, if there's a wave you don't like, you can't push against it. The wave's going to win. But you can sit there and kind of like, all right, we got small waves here, or is there a big one coming? It's the same thing in trading. So right now we've got a lot of violent back and forth, and this violent back and forth, it reminds me a lot of parts of 2015 as well as parts of 2018, and where you just kind of had literally one day is up, it might be bullish for 3 days, and then all those gains get wiped out. Okay, so this is not a swing trading environment, and this is tricky and it's frustrating. And that's really the big thing to understand. This market is designed to be frustrating. There's a record amount of retail traders that are short right now. Guess what the market's going to do? It's going to wipe them out. That's where the frustration comes in. So what this means, though, and this is what it means for us, is that normal targets, okay, to the upside and to the downside, don't quite get hit. Okay, so if you've got an upside target here and you're like, man, as soon as we get even close to this, I'm out. What's happening is we're getting not really close and then we're dying. Okay, same thing. Here's a short target, and normally it's like, okay, if we get here or if we get close, I'm going to take my profits, and instead we get there and then we just rip higher. Okay, and that's happening all the time, and it's super frustrating. So that's one thing there. And so look, if you've been frustrated by these markets, now you know why. Okay, and I've honestly been a little frustrated myself as well, because it takes a little time to kind of get used to what's happening here. So what the bottom line with this is that it makes what I would simply call narrower tradable levels the key to navigating, for lack of a better word, what this minefield is. Now, that being said, I want to let everybody know, we talked a little bit about, we're going to have a raffle giveaway tonight. So we'll be on here for about, usually the webinars last about an hour. We're going to be talking about this tool, and we're going to have 3 questions. And if you can answer these 3 questions correctly at the end of the webinar, we're going to give away 5 $100 gift cards. So it's an incentive to pay attention and to stick around. And hey, if anything like this, $100, that's like catching, 2 full handles on the S&Ps with 1 contract. So that's not bad. And you don't even have to pay commissions on that. So stick around for that. So why do levels matter so much? Now, if you guys have been with us for any length of time, or if you've been trading for any length of time, there's different kinds of levels out there. One of the most popular are Fibonacci levels, and I'm a fan of Fibonacci's. If you're familiar with a tool we released last year called the Quant Pivots, I'm a huge fan of Quant Pivots. Back in the day, I used to use floor trader pivots quite a bit. Now, the main commonality between all 3 of these is that they change all the time. Quant pivots change every day. If you're using the daily, they change every 2 hours. If you're using that, it's totally fine. It's just understanding that they change because they are adapting to the market. And that's awesome, and I want to use them. Fibonacci's are the same. Once you make a new swing high or swing low, guess what? You got to redraw all the Fibonacci's, and that's awesome. They serve a great purpose. But then we have the Voodoo lines. And I'll talk a little bit more about the Voodoo lines if you've never heard of them. But basically, and why, frankly, I call them that. But basically, they're there all the time. Okay, they're the the grandma that you can rely on. Every time you go to your house, you're going to get a full plate of food. The Voodoo lines are always there. Okay, so you know where they are, and that's going to be. We'll talk about why that's important. So the main thing here is that these Voodoo lines, the major Voodoo lines, these have been a mainstay for my own trading, and I know Henry and David's trading as well, for a long time. And it's really, though, it's been more for swing trading because the levels are there. You might get in at a fire line. If you don't know what that means, that's fine. And then you can hold on for weeks until it, bounces to the snow line or whatever. We'll get to that in a second. But here's the thing, is that what we've seen in this current market is that there's a lot of this violent chop, and it's happening in this black space. If you guys have heard of, space is made up of like 97% black matter, meaning there's nothing there. In a grain of sand, there's something like 3 quadrillion atoms. And in space, if you have like 10 cubic feet of space, there's like 2. Okay, that's the void. There ain't nothing there. So what we're seeing in this current market is there are voids in between these key levels, and there's a lot of turning points happening in those voids. And frankly, it's been driving me insane. So what do I mean by a void? So for a void, so here's if you guys are familiar with the Voodoo lines. So right now, some of the key Voodoo lines, and these are the major Voodoo lines that are coming up. There's one at 40.1950, and then the other one here is at 39.80. Okay, these have been here forever, like decades. Okay, they haven't moved. And what's great is that when we do come down to these levels, or we come up to these levels, the market is reactive to that. Okay, and we want to know. But what I'm talking about the void is that, well, why did we stop here? Okay, why did we stop here? Why did we stop here? just different things like that. And that's where it gets frustrating, because if I'm short here, I'm like, okay, great, I'm holding on until we get to the snow line, and then we turn around and we rip, and the trade I had gets, I'm like, wow, I had a profit now, and now I'm getting killed on this, and now I got to get out, and that's frustrating. So here's an example, a recent example from this week. So on Monday, if you guys remember, we gapped up, and if we gapped up here, and we gapped up into air, into a void, and then we got slammed back down to the major snow line. Okay. And then we slammed down here into a void and we bounced. Okay. Well, if we look at something like this, what's going on with that? Well, it's a void if you don't have the tools for it. And so if we have what's called the micro voodoo lines, we can see like, wow, okay. And up until now, this is not a tool that's been released. We slammed right into the micro tree line. Okay. And when we came down here, we slammed right into the micro fire line. And I'll get to this in a minute. Like I really didn't know about these, so I was a little upset when David was like, John, these are working really well now. You should use them. I'm like, bro, that would have been awesome to tell me this a while ago. And he probably told me honestly, and I just didn't listen. So I was a little upset. But let's look at this today. So I was upset until I started using them and making money, and then I'm like, okay, thanks, David. So here we are. So here's the 5-minute SPX, right? This is today. So we gap up. There's this huge gap up. All right. So now if we look at the major voodoo lines, not a shocker. We kind of stalled out here. This is the major voodoo line at 40.19, and then here's support at 39.80. Okay. But look, we come down here, we kind of stop. And then where did we end up later today? Well, now if we come over here to the micros, we can say like, okay, we came up, we came back down to the micro tree line, right? And then you can see here, we couldn't get through this forever. And where did we end up today? Not a surprise. We ended up today near 40.24. Why? Because that's where the tree line was there. And so I'll fast forward to the next slide. And this is when we set up these, and today we set up these trades. I think Henry was long. He was looking at the NASDAQ, but he did a trade on the indexes. David was long. He'll show a trade example of that. I had a call debit spread. And also too, the other trade is initially this morning when I was on the mic this morning, I was looking at this and I went ahead and put on an iron fly here. But once we took out this high here at 40.15, I'm like, oh my God, we are going straight here. So I closed this out for a small profit. Okay, so I was able to get out of a trade that would have turned into a loser for a small profit because of this, and made a nice profit on the call debit spread, which is pretty sweet. So this is a lot of noise here, but this is an excerpt from the trading room. So for those of you that are in our trading room, you know how it works. If you're not, this is our trading community, the gold options room. We do some, we call it the options room because primarily we're trading options there. So this morning I'm like, all right, so, and I'm posting trades, David's posting trades, Henry's posting trades, other people are posting trades. So I'm like, all right, here's this iron fly. I'm going to set this at 16 bucks. And then also because of what's happening on the micro voodoo lines, let's go ahead and buy this call debit spread on the SPX for $4.60. All right. And then you can see the little chart there that I posted. But once we started breaking, I'm like, oh, okay, you know what? This market is giving me information. The voodoo lines are giving me information. I need to get out of this iron fly. And so I was able to get out of it at a 75-cent profit. Okay. Not a lot of profit, but it's you can get the extra espresso in your Starbucks and all that kind of stuff. But the most important thing is, had I not paid attention to the micro voodoo lines, I would have gone at max loss. Okay. And on a $25 wide spread, and I got a $16 credit, if you guys are familiar with spreads, max loss on that would have been $900 per contract. And instead, I, put $75 in my pocket, less commissions. So that's the other thing that's nice about this, is it kind of tells you like, oh my God, I'm wrong. And instead of waiting until the end of the day, I can get out early. So we got the call debit spread here at 460, and then we sold it half at $6, and then we sold half at $7.20. So it was awesome. And it was a pretty easy day. I mean, it was a slow, quiet day. There was a lot of bad news, and it seemed like, wow, maybe these markets are going to tank, but it turned out to be a kind of easy, profitable day. So these volatile swings, right? So these volatile intraday swings had been annoying the crap out of me on many levels earlier this year. Now, as you guys know, I've been doing like these quick hits. They were really awesome last year, and this year they've been good, but we've seen this thing where I put on a put cred spread, we get the buy signal, the markets start to rally, which is great, but then we turn and we reverse down so hard that I'm scrambling to get out for a scratch. Okay, had a nice, literally on Monday, I sold a put credit spread for 420, and my target was 250, and we got to like 270, and the market turned around. I had to scramble to get out for like a 10-cent profit. Okay, that's what's annoying. It's like that's the kind of stuff like, hey, I'd like a heads up on this kind of stuff. So this is when I started asking. This is a process where Henry and Dave and I, we've been trading together for like 10 years. And so I'm like, all right, what are you guys doing in this market? Here's what I'm looking at. This is what's frustrating. And Henry was, and Henry's super methodical, and I always love his process and what he's doing in his trading. And then David said something like, well, I'm just, these micro voodoo lines are really working good here. And I kind of feel like I was in the twilight zone. I'm like, the what? The what, David? The what voodoo lines? Because I'm like, what are you talking about? I've never even heard of these, and I've known you for like 10 years. He's like, um, he's in, anyway. So I've been using the major voodoo lines for like 12 years. And the only reason I use them is because David was very polite and persistent back in 2010. And he'd send me a couple of emails, and he's like, John, look, I know you get a lot of emails, but I really think you should look at these. And look, I get a lot of emails from people that have the next holy grail. So I'm kind of like, I'm a little jaded, to be honest. But finally, he caught me on a good day, and we went over it. And it took me about 4 seconds to realize that this guy is a freaking genius, and that these levels that he created are unique. They give an edge, and they give an edge to everybody that has them. And there's not an edge to all the other people out there that don't have them, right? And I call them voodoo lines because the way he explained it to me, because he started saying the word Elliott wave, I'm like, oh my God, I'm out. This Elliott wave. If you get 10 Elliott wavers in a room, you're going to have 20 different opinions on the market. And he laughed, but he started explaining like, well, first of all, Elliott wave gives you a proper narrative of the market, so you understand what kind of market it is. But the way that the voodoo lines work is that when you go back and say, okay, once we've got a confirmed, say, wave 5 top or wave 5 bottom, everybody agrees on it. That's when the voodoo lines are generated, and they stay there forever. And that's why they work so well. So that's why I call them voodoo, because I've always joked that Elliott wave was voodoo. But I'm like, oh my God, they work. So my whole world changed once I realized how powerful these major voodoo lines were, and the fact that they're always there. Okay. Every other levels I'd used up to that point had changed from day to day. So now we've got a situation. So this is the major voodoo line. So here was the chart. Here's the S&P 500 without the voodoo lines, and it seems like this movement's kind of random. And here's the major voodoo lines. The fire line is the most important, and then the tree lines are the second most important, and then the snow lines are the third most important. You can say, oh my God, we ended at the snow line. Oh my God, we ended at the tree line. Oh my God, we ended. So it kind of gives you a map of the markets, right? All right. So what I want to do now is I've got more trades I want to show you guys, but I also want to introduce you to David and to Henry, and they've also been using this. And what's great about this is that the three of us, we work together really well. Like I said, we've been trading together for about 10 plus years, and we each kind of have a different take on the market. So it might be something where like I might be more aggressive. Henry might be more methodical, and David's taking more into account what should happen here, based on like say an Elliott wave model. And I found that, when I pay attention to what they're doing, I trade better. So Henry and I, we first met, gosh, Henry, I think it may have been 2009. I know it was, Dylan wasn't born yet, and he was born in 2010. And Henry, I had called Geek Squad, and Henry came over to fix some computers. And like literally the very, very, very short version of the story is 6 months later, he was working with me full time. He started wanting to trade. The funny story is that he ended up doing, he thought he was trading 60,000 shares of IAG in a demo account. It was my real account. And like I was locked out of trading, and he ended up making some money, which was pretty funny. And then David, who I'd met, with his introduction to the voodoo lines, I just realized that, wow, this guy is, he knows Elliott wave better than anyone else I know. And to me, Elliott wave, I'm just like, well, I'm not going to spend, I understand it, but I'm not going to spend a bunch of time knowing and learning the nuances of it, because David's already an expert. So what I'd like to do is I'm going to turn this over to David. And let me there we go. So David, I'm going to turn this over to you, and you've got some slides, and you want to talk a little bit about how you're using the micro voodoo lines, and then Henry, and then I'll also come back on as well.
Yeah, thanks, John, and of course, thanks everyone for being with us here tonight. John mentioned the uncertainty in this market, right? And really it comes from a market that has no memory from day to day. Not like the two little charts I have on the screen here, which are more trending, right? Um, but not knowing whether any given day in the market is going to be up or down, that's not new to what we're seeing right now, right? Um, we have that uncertainty even in trending markets, but there's a reason why the trend is your friend is the oldest of trading maxims. In an uptrend, right? If out of the blue we get a pullback for a couple of days, that's a gift, right? It comes down into the moving averages, or you get a few days of a squeeze, and that provides a great opportunity to join the trend. The reason trends are so friendly is they're just gosh darn persistent, right? It'd be nice to think that the action we have now is as easy as a trend, right? That it would have that if there's no defined direction, you just play some butterflies or some condors to make money for the market staying in one place. But it doesn't work like that, right? This chart, it's an hourly chart. It covers about a month of trade, and there are periods where it stays in a range, right? Up a few days like this, down a few days like that, up a few days. And on the left half of the chart, right, we change directions a few times and stay in the range, but then it turns down and then it breaks down and then it just keeps going. So even while it lulls you into thinking that it's staying in one place, right? Then it does something else. So when the market has no memory from day to day, and when each day has fresh news of inflation and rate hikes and recession, bank failures, right? Whatever the news du jour is, it can be difficult to make sense of the price action, and it can be exhausting to keep up with trading if you don't know what's going on. And so what I want to show you is how we figure out what's going on, right? So here's the same chart with the micro voodoo lines on them, and it may look busy to begin with, but I think you'll see the secret to trading this market is to knowing what the levels are that the market is reaching for when it makes these wild moves. Right. So just like the classic voodoo lines, for those of you who know them, price has a way of systematically moving from level to level to level. And also like the classic voodoo lines, right? These red fire lines, like the one we ran into here and found support at here, found some support here, right? Those are the most important of the levels, right? Followed by the green tree lines, right? That stopped price here and down here and up here and down here. And then the white snow lines, there are usually lilac colored skylines, but I've turned them off for this chart because we're on an hourly here, and that's too long a time frame for these micros. But the thing that you can see zoomed out on this higher time frame is the systematic movement I was talking about, right? We run up first into that that fire line, and that sends us back down, right? A little below the first tree line to a snow line, but it comes back up, tests the next tree line above to find support. That sends us through the fire line, right? These are the second most important levels. We get big swings from them generally. We bounce between that tree line and fire line, right? Until it sends us back through the fire line again to where a tree line. And it goes on like this, right? On and on and on. So while it doesn't necessarily tell you exactly what we're going to do at each one of these lines, right? At least we've got a starting place to make sense of this market. So look, this is why we're coming out with these now, right? So the voodoo lines, they've been helping us make sense of price action for years. John mentioned a little bit about the Elliott wave stuff, so I won't delve into it, but he is absolutely right? The problem with Elliott wave is that you've got a whole bunch of people with opinions on what the Elliott wave scenario unfolding is. And that's a huge problem, right? If you don't know, am I in a trend? Am I in a counter trend? Am I, what's going on? What's the right wave scenario? You don't know what to expect. Voodoo lines takes that problem with Elliott wave and turns it on its head. The problem is it works great in hindsight, right? And everyone who runs away from it focuses on that in hindsight part, right? And not the it works part, right? So it works as a way of describing these moves in the market. And so once you know that, then you extract information from those wave scenarios and you turn it into these lines. That's what the Voodoo lines do. That's the technique I discovered a long time ago. Right. I've also used the micro Voodoo lines for a number of years, but honestly, I've been too stubborn and hoarded them and kept them to myself. I've shared them as screenshots with folks, but I've never turned it into an indicator because these do need some work to update. And I kept saying it's going to be a lot of work. It's going to be a pain. But I kept talking about them with John and showed him, the charts that we used to look at in some of our trading rooms, the Voodoo Mastery Room and things like that. And he said, look, we got to have this in an indicator. And he's right. He broke me down and I just said, yep, I'll do the work. I'll put him in an indicator so that you can have them on your charts, which is really what he needed. And what everyone I know who trades with them currently is eager to have, right? The levels on their charts. So that's what we have now, right? Now this is today's action, and I want to show it to you because if you're struggling in this market, I want to give you a sense of why that might be, right? This is today, and we were up, we were down, we were up, down, up, down. I won't narrate it all with the marker because it'll take me a while to erase it. But let's look at what we did, right? We gapped up into one of these snow lines. These are the third most important of the levels, right? And then down to a tree line. Now, without going into too much detail, right, this tree line up here, it's a companion to this one down here. And when we turn up from that, what I generally look for in these Voodoo line levels, right, is if we hold this level, I look, right, as my next target towards the companion level on the other side for us to reach there. All right. Now, it's not a guarantee, right? It's not a guarantee, but it's where I'm going to look for us to try and reach. Now, along the way there, I want to look at these next most important levels in between, these snow lines, right? And you can see we run up to the snow line, we kind of come back, and the market just gives it a little task to say, do I really want to hold? And it says, yes, it does. And where does it go right next? Right to the snow line, right? And it's not ready to break that next snow line yet. So where does it go? Right back to the snow line below. This is today. I mean, those of you who are with us in the trading room, we were watching this together, right? Tries to break through, right? Kind of runs out of gas at the minor level on the other side, the skyline, comes right back below, regains its footing right up there, right? Comes back, gives us a little nod to let us know it sees this level here, and then it's up, retest from above. You see how it keeps doing that? It doesn't do it every time, but it does it often enough that you look at this and you say, this is a trade. Boom, it's holding there. We're going up. And it made it modestly through my target, right? But that's how having these levels makes this market make sense. And because we're we're having no memory from day to day. That's why we need these smaller degree levels on smaller time frames, right, to keep up with these little wiggles, because it's not safe in this environment, as John was showing you with his trades. Is not safe to just sort of say, well, in any other time, right, not the trade we've been having the last couple of months, right, we go back down here, right, and we don't, right, we do something else. So let's show you how we trade this stuff, right? These are all real examples. We all traded them with our own real money. John with more money than some of the rest of us, but real money in all cases. Same chart, right, that we were just looking at. So look, I did some trades this morning, some short trades in here, some long trades in here. Once I started to see us turning up, right, I got out of some of those longs when we came back down, but this is what I was doing this afternoon, right? Exactly what we were talking about, because this was scaring me a little bit that we're coming back so strong, back below this snow line, right? Short-term trades in a market that has short-term behaviors. So we come back up, we test from above, we start to turn up, right? Now this is a chart of the S&P. Right? I'm trading the ES futures, but you could have traded this with SPX options. And certainly one of the things that that we have a lot planned in our class on these lines about is talking about, hey, when do you use the S&P index levels? When do you use the futures levels? All that stuff. But for right now, you can see it's coming right back up. Right. It gave me a big wiggle here, right? Breaking these skyline levels. And we were so close to my target when this broke down. I said, let me take profits, right? But then it rehabilitated itself, got back in, back up. I took just shy of 15 points here in the afternoon, right? In about an hour. So that is, let's see, 14 3/4 points. So $737.50 a contract on the move up. And that's just right. It's just watching the patterns, knowing the levels, and having the market show you what it wants to do. Now, there are lots of ways you can trade this. This was just pure price action, right? Pure watching how price interacted with these levels. But let me show you a chart from a couple of weeks ago. Another really messy day, right? We started climbing up pre-market, stayed here a little bit till the bell, jumped up early in the session, and then gave it all back, right? It's a sloppy, messy, tricky day, right? So let me, let's look at it with the micro voodoo lines. Right. So pre-market, now these are the levels in the ES futures, right? Up into a tree line, back down pre-market. It's not as crisp as at the levels to the snow line, comes back up to that tree line before the open, little dip up, that same little jog, right? Down, test that tree line and hold up to the snow line. Right, comes down, tests it from below, and then falls apart to the tree line, wiggles there, and drops where? Well, to the snow line, the next smaller degree line below it. Now, I'm not saying you need to get all of these. There are ways that you probably could have bought the pullback to here. I had one trade that day, right? So remember, we went above that snow line, came back below, tested it from below, and rolled over. And right back to the tree line. So this was my trade for the day, right? Waited, right, until late morning. It flipped over. Now, this is just an indicator called Trend Spark. Henry uses ATR trailing stops. I think he may show them later. You can do a similar thing with those, right? It turns, just ride it down, right? It never even makes these wiggle until down here, these little dots that I use for my stop. But Look, I like to be safe. We drop 5 points for my entry, take half off, trail down. At this point, I'm well enough in the money, and even though we start to get some bounces above those dots I used for stops, where are they? Right to the skyline. I ignore the stops, right? That thing you're never supposed to do. Never ever ignore your stop, right? Yeah, ignore your stop. There's a micro level there to save you, and right down to the tree line, took my profit. It went a little below that, if you remember from the other chart. 5 points on the first contract, right? 19 points on the second contract. And that was an hour and 15 minutes in a day that changes, right? You remember the larger chart. Up in the morning, down in the afternoon, net negative day, typical for the crazy stuff that we've been seeing. Now, I love the little quote at the top here. It's from an old boss of mine. Right? If you've never missed a plane, you're spending too much time in airports. This is a loser, right? It would be disingenuous to tell you that every single trade I've made over the past several weeks has been a moneymaker. It has not, right? And look, if you're losing on every trade, there's a problem. You got to fix that. If you are winning on every single trade, and this is what I'm referring to in this chart, you're probably not taking enough trades, right? So this is a trade setup I love, right? So we started off in the morning. This is the ES futures again, and I love this setup. John was talking about the quant pivots before, right? This is one of his inventions. It's basically a volatility based pivot. These are 2-hour quant pivots, and the idea here, right, is so this is a an extreme level, right, on the upside here, and an even more extreme level here. And one of the things I like to do is fade Voodoo line levels that are just on the other side of a quant pivot, particularly these H2 or the L2 support pivots, because those are the most extreme ones, right? So it's a way of saying, look, we never know for sure whether we're going to turn at a micro Voodoo line or not, right? But we have a pretty good sense if we're through an H2 pivot that this move is overcooked, right, and ripe for turning back down. So look, this one wasn't, right? But I sold it right here. We weren't all the way to the Voodoo line, but we were through the quant pivot, right? And we wiggled around for a few bars, and then we went up and we held above the Voodoo line. And that told me, yeah, this is not turning down from there, right? It paused enough that that selling a call credit spread up here, right? Or actually not even a call credit spread, just selling outright calls, right? I lost $62.50 on this, right? By fading this move, by knowing where I wanted to be out and knowing it was nearby. And it went wham, right up through it, right? And so just like John was telling you with his trade earlier, right? I mean, the main thing is to save yourself on the ones that don't work out. Now, he made money on his trade that didn't go where he wanted. I lost a little bit, right? But the point is making sure that we can still take some shots, just taking good shots, right, that are defensible. So this is the last one I want to show y'all. Now this is this morning pre-market in AMD, right? So individual stocks, right? Now, unlike the Voodoo lines, right, the classic Voodoo lines, what John was calling the major Voodoo lines, where we've got about 300 stocks, right? The micro Voodoo lines on very short time frames, they rely on shorter term patterns, and those will change more often. Fewer stocks will have clear enough patterns to generate them. So this isn't about having levels for a huge number of things, right? For the most part, we're going to focus on having levels for the S&P, the NASDAQ, the Russell, right? And a few stocks of the moment. So the only ones that I have in levels for in micro voodoo lines right now, beyond those indices, index futures, index ETFs, are Apple, Tesla, AMD, Nvidia, and some banks, because banks are on everybody's mind, Wells Fargo and JP Morgan. They're not the regionals that everyone cares about because they're not liquid enough for the micro voodoo lines. But the point is to try and get a few stocks of the moment that we can that we can look at. So this was pre-market, right? So well, this was yesterday, right? Yesterday we ran up into the tree line, right? And then we slammed down. We didn't make it all the way to the companion lower tree line, right? But I'm not trading against it here yesterday, right? We came close. And remember, what we do to benchmark moves between these companion levels is we look at the snow lines in between, right? So we climb up above it. This is into yesterday's close, and then overnight come back down to a skyline, up to a skyline, and then this morning, early pre-market, tested the snow line and held. And I said, well, gosh, if the move is from here to here, right? This level and this level are the ones we need to hold, and we test this, right? We should be going up into 96.80, right? So what did I do? I bought some pre-market, right? 95.47 up. I got off half at 96.80, half a little bit below, right? Quick little move, right? Just in the stock, not options, because I was buying it pre-market. But it's just another way to use these things. So I know Henry has been trading some of the same stuff, different techniques, different triggers, right? There are lots of ways to use this stuff, right? The thing is to have the levels that make sense of the price action. And then there are a lot of triggers you can use against it. So let me turn things over to Henry now, and I'll get you to his slides, and then listen with you to what he's got on his mind.
Great. Thank you so much, David. And thank you, traders, for joining us this evening. Just give a quick sound check here real quick to make sure that this is coming through. I'm assuming probably is just fine, but I'll begin by telling you, that I know I'm not alone when I say how thankful I am to have found David and his work through the Voodoo lines. I hear a lot of like, oh, I just trade off a price. And it's like, well, when you're only looking at price, it can be extremely difficult to know what the inflection points of the day are likely to be, right? It is entirely too easy to be looking at something like this and think, oh, let's come in and see price falling down here into fresh lows on the day. Maybe this is a good place to get short. Well, clearly that didn't work. And for those of you that are attentively attuned into the market, you'll notice this as being a 2-minute chart of the NASDAQ for today's trade. So again, initially selling off, looks like a spot where maybe it's a short, and of course rallies from there. And I just think it's very easy to look at it towards the end of the session and say, fine, bulls are in control. Let's catch this for the end of day rally and get long. Well, then of course, 30 minutes before the close, that ends up being the high. And a lot of times it ends up emphasizing, some type of emotion that is something like that. But, once you approach the markets with these micro voodoo lines, you're going to have so much more clarity in your day-to-day trading decisions. There's an entirely different perspective to have in trading when you really know where support and resistance is. So if you look at this, it's the exact same chart, but all I've done is added this single micro voodoo line indicator onto it. And now you can really see, all right, the opening sell-off drives you right down into the micro fire line. And from there, not only is it good support, but it is the support level of the day. right? So we'll look at this a little bit more, but I want to jump back for just a second and look at one of the examples from last week. And if you're in here this afternoon, I hope you don't mind me using our conversation, but Anne commenting here that morning saying, man, I'm so grateful for these snow lines. And I said, I really know how you feel. And I think for today that SPX snow line is really the spot to watch. And again, here taken from the chat, just saying that I think the SPX could, tag this level to the tick and, getting this out there in public before the day even really began. So we take that and we move into the chart of what the session actually ended up looking like. So after having made those comments, this was the same kind of scenario. You see how you get the gap down. This is the transition into Friday's trade because we're coming off of the Fed, right? You're getting the action that was Wednesday and then Thursday, and then essentially this straight down cascading price. Notice how there's no real meaningful bounces until you get into these Voodoo levels. And then from there, again, showing that this was the spot to watch for that day's trade and really gave us some great opportunity with those short put spreads. So you can see the gap down into it. And admittedly, I will say that when you use these so often and you find that they do hold to the tick, you want to see spots like down here where it got a little bit below. But look at the instance following it. Right? You pierce down a little bit below, you bounce up, and then you hold it to the tick. And then, this move right here, that comes just below that level, and it ends up being the spot for the day. So essentially the 39.17 that was that most important Voodoo line to begin the session ends up giving you 35 points into the end of the day, closing up there near the 39, a little bit closer to 39.60. So that was just, knowing ahead of time that was very likely to be the low of the day, and it ends up working out perfect. So you only need to have that happen a few times to really make some good money off of it. So if we move back over and do, a little bit more work or, look at some of these examples with today's micro Voodoo lines, as you may have heard, the fire line is the most important of this study set. It carries the most significance and will almost always offer some kind of trade opportunity. It's one of the things that I address each morning, is I want to make sure that I am aware of these levels on a daily basis. Again, today's open was similar to Friday's in a few ways. Primarily, the most critical support was below us, and we need to stay patient for a hit of that. Once the test of support was made, again, you see that NASDAQ falling down into that micro fire line. It tests, it gets a few ticks below, admittedly, but it starts to catch my eye, when it gets above. And do you see how it's, on the first attempt, maybe a touch below, but then when it bounces, pulls back, and then holds to the tick? Not only did this work well with the micro fire line, but you add this into all of the other things that you may be using with the market. For me, this was a reflection of the European close. And I like mentioning that one to you because that's very easy to follow, right? That's no indicator. That's nothing that anybody can look at. Okay, when does that session close? And often that can bring an inflection point in the US markets, right? So you see how that moment in time was accompanied by this technical level. And from there, that was the low of the day. So I took this level and I sold a put credit spread through SPX, as I don't love the liquidity in the NASDAQ. Now, that can be fine. If you do end up catching a big directional move, those options can still work. And you also could have traded it through the Qs. If you wanted to maintain this direct exposure, straight to tech, that would have worked as well. But I looked at it and thought, well, the market is obviously very critical around tech. And if the NASDAQ finds this support, as I think it's going to, that's going to ripple over into the SPX. So this was the spot where I sold the 39.20 and the 39.15 put credit spreads. I do those with varying widths, and I like doing them just a little bit in the money. So ideally, as support holds, you're getting the crunch of intrinsic value, right? So you're selling premium, but you're also playing it directionally. And it really did a good job of keeping us on the right side of this trade, all the way into the exit bar, where you can see that piercing just up above the highs of the session. At that point, we had good monetary gains in our spreads, and I felt like we had reason to go ahead and take it off. Now, there's several ways you can exit and keep involved with these trades. The way that I did it today was based off of a monetary gain, which is essentially to say, if I can sell a spread for, I did the $30 wide for $14, and if I can make 50% of that, that monetary gain is good enough. That's that monetary gain where you saw the exit on that previous slide. But when you look at it now with the completion of the day, right? I closed that out about 90 minutes, 2 hours before the close. But look at where you would have gone on to had you given it the full day, right? Again, showing you that this is where I opted to take my exit. Kind of drawing tools are a little different here. Let me show you exactly. But again, this is where I took that exit based off of a monetary gain, where you're not worried about how far it goes on technically. You just want to lock up that meaningful profit. Well, from that moment, look where it goes on to, right? Having a dad that is a retired firefighter, I'm very sensitive to wildfire, and things like that, and obviously knowing the destruction that things like that can cause. But I mention it to you because if you study this and you look for situations where fire leads to trees, and it's just this logic that unfolds inside these patterns. But do you see how that grabs it to the tick? In these previous slides, you would have seen where that fire line to tree line roadmap was, right? These levels are not populated after the NASDAQ makes that perfect high tick. The NASDAQ goes up to complete this roadmap, and then from there, it's essentially done. So this has been one of the biggest things that I've been using in my day-to-day trading. Again, I'm extremely grateful that David has been willing to take the time and effort to update these levels. As he mentioned, there are a few ways of taking advantage of it. And one of my favorites for triggers that we'll be going into with more detail, but I've also covered this in the sessions that I do in the options room, in the free training room, if you guys attend any of the sessions there. But you can probably look at this and see the general simplicity of it. And this is just your ATR trailing stop. And it's one of my favorite, most simple indicators. Now, this is a different session, but it's using this example to show you, when you can catch a trending day, essentially from here, you're issued that sell signal about 30 minutes after the market's open, and you stay on the sell side of that all the way down into, plenty of time to take profits on just about any kind of strategy you're using. And, just a nice way of letting you know when maybe it will be time to take some of that off. So that's, again, a very basic indicator that I'm going to be covering a lot more. But if you just add that into this study set, you really can complete a solid trading plan. And, it's one of the, again, one of the best things that I have found in this market. So, great levels and good entries are a solid foundation to building and making your very best trades. And, if you spend the time to learn this, that is where you're going to find yourself. So again, thank you to David for putting those together. And that's kind of what I've got for my, representation of these.
Yeah, no, that's awesome, Henry. And I'm glad, it's what's good about something like this is that we've got, somebody who's asking, like, can you use this on other time frames or different things like that. And I can show you real quick on, I can show you the S&Ps right now. I was looking to see if a trade would set up here, and you can see that we've got, this is the live shot of the S&P futures. I've got the dome, I've got time and sales, and I was looking to see if we were going to, kind of come down to the snow line here to see for a potential trade, but we haven't quite made it. But you can see this is a 5-minute chart, so you don't have to look at it on a 1-minute chart or anything like that. And so that's totally fine. Totally fine there. Just so you know. But so let's go back and kind of take a look here. So I'm going to keep an eye on that, and if anything kind of pops up, maybe we can do a trade here. But that was something I wanted to keep an eye on. So really, the question at this point then is, how does this tool work so we can time these moves, kind of these micro moves in trading that will maximize our annual income goals. Because really, when it comes to trading, we're doing this, we're not doing this for fun. Although some days, if we're not conscious of that, we may get trapped in the idea that we're doing it for the dopamine rush. But really, at the end of the day, we're trying to use this to make it to money, right? And so what we want to kind of keep in mind with this is that what's going on with the markets right now is that, look, there are times where the market certainly will allow us to take larger positions, and we can hold on to those for weeks at a time. And obviously that's kind of ideal. It makes it a little bit easier because the only thing that you have to learn in that situation is how to manage your anxiety. How do you manage on the anxiety of holding on to a position for, like, say, a couple of weeks at a time? And that's a whole nother kind of a thing. The nice thing about these shorter term trades is that they're clean and you don't have to be in a trade that long. So guess what? You're not going to have as much anxiety. And so that's kind of nice. The market hasn't been like this in a while, like where you can hold on for a couple of weeks. And I honestly don't expect that to happen anytime soon. I really don't think we're going to see sustained upward drift in asset prices until we get back to quantitative easing again, and that's probably going to be later this year. So we got a lot of violent chop coming our way. So instead of these big trades, these $1 million trades where it's like, oh my gosh, I'm going to put 20% of my account onto this, I'm going to hold on for 3 weeks, and woohoo, I'm really dialed into this idea of kind of get 0.5% to 1% a day for income, to not only to pay the bills, but to pursue the lifestyle that's interesting to me. And we'll talk, that's a little different for everybody, right? And so in this environment, I've made the joke before that I really can't sleep that well unless I have positions on. And in this market, it's the opposite. I actually really prefer being flat overnight for the most part. And yeah, there's going to be some trades that I, like right now, I like Microsoft. I'm like, I want to hold that up to 290. So that's fine. But I don't have a lot of overnight exposure. Now, I know that if you're trading, like 1% a day does not sound sexy at all. Because like 1% a day, shoot. I remember that one day where I made 12%. But what we're talking about is consistency. The banks are the biggest scam on the planet because they're like, oh, we're going to give you, they don't even though interest rates are at, 5% now, they're like, oh, we'll give you 1% a year. And guess what? The magic of compound interest. And if you put money into this and you live to the age of 307, you're going to have enough money to retire on. So 1% a year, like, screw that. The idea of trading is, what if you could compound instead of 1% a year, it's 1% a day. Okay, that's where things get super interesting. So again, it doesn't sound like it's a lot, right? But if you look at this, so if you do, 0.5% a day is 2.5% a week. So this is based on a week. So if you start with $100,000, you make $2,500 a week, and at the end of a year, you have $370,000. Okay, that's 0.5% a day. So obviously you're not going to make exactly 0.5% a day. Sometimes you might make 1%. The key with this, though, is what? You don't have big losses. And if you're using micro voodoo lines, you're not going to have big losses because you're going to have a level. And it's like, oh my gosh, it got down through that level. I guess I should get out. And guess what? It's not that far away. Now, if you go from 0.5% to 0.75% a day, you just tweak that 0.25%, boom, you're, instead of having 370,000 at the end of the year on a $100,000 account, you have 613. And if you go to 1% a day, that's 5% a week, starting off with $100,000, you're almost 13xing your account. Now, obviously there's commissions and stuff like that in there, but the point of this is that, this is like one trade a day. Wait for the right trade. You don't have to trade 20 times. You don't have to hold on to a trade for weeks at a time, and take advantage of things like zero DT options and SPX. You can use SPY, you can use ES, you can trade individual stocks as well. So the idea with this, because we have we traded the micro voodoos on Tesla today. So the idea with this is that, in trading, a lot of times we get caught up in the wrong things. We get caught up in the idea that, oh my gosh, I got to be right. I have to know what happens next. What's going to happen to the banks? I need to know, are the banks going to make it? Are the banks going to fail? You don't. All you need to do is create an equity curve that starts at the lower right of your screen and goes to the upper left. That's it. You don't have to read a newspaper. You don't have to know what's going on in the world. You don't have to be cognizant of current affairs for that to happen. You do need to have a trading plan. You do need to understand risk control, and you do need to have a methodical way that you can get in and out of a trade. That's it. Okay. More knowledge is not more power. So one question that comes up is, a lot of us, and me included, are still looking at what we call the quick hits class. And this is something where we're looking at this kind of rotation in and out of the markets. And I've gotten a little bit of frustrations with it because, we might get something where it's like, oh, we're getting this rotation up and then it just wham, it comes back down again, which can get a little frustrating, right? So what's a little great about this, when we did this quick hits on Tuesday, is that, we got the slam down. So now remember, over here, there's this void. Why did the market stop there and bounce? Why did the market stop there and bounce? Okay. And if we come over here and we look at the micro voodoo lines, it's like, oh my God, there's this huge micro fire line here. Okay. Guess what? That's going to be a magnet. Boom. We come down to it. We come down to it a couple of times. So on something like this, then it's like when we came down to the first time and we bounced back to the snow line, that is like my favorite short on planet Earth. And then we were able to use this in conjunction with quick hits if you need a little bit extra confirmation. And then boom. So the beauty of this is that typically with quick hits, we've been doing a lot of SPX spreads. I love spreads. I'm a huge fan of spreads. The biggest issue with spreads is twofold. One, in the morning, they are a directional trade. You don't get a lot of theta decay. That theta kicks in later in the day. But what's great about this too is if you want to do something simple, if you're not like, what, I'm actually newer to options, I don't necessarily want to do spreads. These are great for just doing, I'm going to buy a put here. Okay. And you could do it in SPY or SPX or whatever you want. And that's great. So on this particular one, not only does it work great with the quick hit signals, which we'll take a look at the chart, it also allows a cleaner way just to do calls and puts. Okay, which I like about that because you're getting in at the level, and at the level is that high probability entry point where you can do a long call or a long put. If you want to do spreads, obviously you still can. I'm fine with both. Typically what I do now is like, okay, I'm going to buy some puts here and then also sell some call credit spreads, and I can manage the puts quickly and kind of ride out those call credit spreads in the case of this trade. But I've definitely been doing more simple trades with the addition of the micro voodoo lines. So here's an advantage of this. So here's what the quick hits look like with the micro voodoo lines. So boom, we got, if you're not familiar with this, that's okay. Don't worry about it. This is just something a lot of us use in the room. So here we're getting the buy signals, and guess what? We start going up into these skylines, and it's like, and then what we can do now is we can start to anticipate when it can turn. And so how these work is that the skylines are kind of the smaller levels. The fire lines are huge. And so you can see like, okay, we're getting into this first skyline. There's no turning. Great. We got to the second skyline. Okay, there's a dot there. Okay, so now great. Let's, we can exit longs, we can go short. And then, but when you see a big old fire line, a lot of times that just becomes a magnet. We just get slammed there. Now, guess what? If we get slammed into this and I got long puts, I'm just going to sell them. I'm not going to wait for this confirmation. And then all of a sudden, we've rallied 12 points and I've given back my profits. If I see a fire line and we got sell signals all over the place and no buy signals, I'm getting out. Like, let's take the gains. And so that's a huge, huge, huge win there. And so the other thing with this too, now you could do this with SPY calls. You could do, in this case, it was puts, but you could do this with SPY puts. This happens to be SPX puts. You could do this with the futures. I like to trade options like this if I'm going to day trade them in a dome. And so this is, instead of being futures, this is actually the 39.50 puts. You just copy and paste the symbol there. This is the chart of the price action. And then on this dome over here, I'm kind of like, okay, great. I'm going to buy some puts, and I can see the bid ask. I can see the time of sales, and you can see like futures, I can ladder my orders. I can drag and drop. You can see my total contract size there. And what's great about this then, like boom, as the market falls, you can see the options spike up. Okay, and then for those of you that are not familiar with our trading room, we got a trading room where we will post the stuff in here. And it's like, okay, here I got the quick hits, I got the voodoos. Let's get some puts here, and let's sell a call credit spread. So I sold the call credit spread for $1.15. Bought the puts for 370, right? And then boom, we spike up. Great, let's get the hell out. We bought them for 370. Let's get out at 7. Let's see if we can get a runner. As it started to come back out, we got out of the rest. And then this call credit spread that we sold for $1.15, we got out at 35 to 45 cents. So that was kind of a nice way to manage it, right? And those are alerts that we sent out. This particular trade was nice. It was a nice $36,000 day. In this account, my goal is $11,250 a day. So on this particular day, I made about 3x that goal, which is great. And then my goal is to then wire out 5% a week. So it's just like, all right, so that got me a little extra cushion, for the week there. So with the major voodoo lines here, so what are the key takeaways? Our edge was always knowing in advance where a move was likely to reverse or terminate for both entries and exits. Now, until now, because David has been using this on his own and not telling us about it, we've never had, because we never asked, we never had the same ability with the smaller intraday moves. We just thought, okay, well, that's just noise and we're just gonna have to deal with it. And we got to be patient. We got to wait for this big level, or we got to wait, 60 points below for this big level here. By the way, the big voodoo lines right now in the NASDAQ NDX are like 400 points apart, right? You want to wait 400 points for a trade? No, thanks. I've got 1% income goals to meet. I can't wait, that long. So until now, we've never had the same ability with these smaller intraday moves. So this has been a huge advantage with quick hits, as we can exit at a predetermined level rather than waiting for an exit signal hit while the market rolls over hard. And as you guys know, if a market is rolling over against you and you got a spread, it is not super easy to get out. So I'd rather get out of those spreads into a key level. Okay, even if it's not at our profit target, that's when we're getting kind of our optimal exit there. So it's all about timing. Life is about timing. The unreachable becomes reachable. The unavailable becomes available. The unattainable, attainable. Have the patience, wait it out. It's all about the timing. I don't know if Stacy's a trader or not, but that's a great trader quote. So the key trade in here is it's not about catching every move. Who cares? Okay, remember, you want to understand why you're doing this. What is your goal? It's not about catching every move. It's about having a few thought out in a normal environment. Okay, and I would say normal, let's call it 2021, even 20, whatever, normal year, selling uptrend. It's about having a few well thought out, well planned trades a week. Okay, and that's when some days are up, some days are down. At the end of the month, you get your 10% or 15%, whatever it is you're going for. And, and that's it. That's all you got to do. All you got to do in that situation is learn how to manage anxiety. That's hard for some people. It takes work learning how to manage anxiety. That's part of trading is you got to learn how to manage anxiety. And you want to do it in real time. You don't want to numb it out. Somebody today was joking like, well, don't you just what if you just took a Valium? Well, you won't feel anxious that day, but you're just bottling up. And as soon as the Valium wears off, that anxiety is going to pop back up, right? You got to learn how to open the bottle and release it. So you're not letting that anxiety travel down your mouse arm and make trading decisions for you. That's bad, bad, bad. But with the micro voodoos, we can also have a few well thought out, well planned trades per day. Okay, so I don't want to wait Monday, Tuesday, Wednesday until something sets up on Thursday. I want to make my 0.5% to 1% per day. And if I can get more, that's fine. But I'm like, if I get my target, I'm kind of done, and that's such a huge thing. It's like, I mean, today, the other day, it ran a little bit more than I thought it would it was great. No complaints. And since the trades don't last overnight, instead of having to learn how to manage anxiety in overnight trades, you can just sleep well, right? And not have to worry about that so much, which is pretty great. So really in trading, I really like it. It's kind of similar to really trying to do that too. Yeah, well, someone's just saying, hey, 0.5% on 11K, right? So I'm trying to get 0.5% on $1 million, right? So obviously that's kind of nice. If you've got a smaller account, yes, you want to have larger goals. And so your goals on your account are going to be based on the size of your account and your goals. Like if you've got once you build up to a larger account, you don't need to push it so much, right? And so that's the beauty of this is you can adapt it to whatever your situation is. So you want to adapt or die. So, and I love this here. You see the math works out, honey. If we just put 90% into some yellow 3-day calls, we'll be good. All right. So great. Anybody that's doing right now is getting killed, right? So you want to adapt or you are going to die. So I do think it's important to know your why. I always joke it would be a lot easier if I just stopped teaching and just traded once in a while. I've made money. I can retire, but there's things that I like to do. I have this crazy coin collecting fetish. This is a 7-figure coin. It's the nicest one of its kind. This is, some of these things that I always dreamed of as a kid. And guess what? Trading allows me to kind of get these things. I like crazy. And those are our zebras. That's our zebra herd. They're now 12. I like to do experiences with my family and travel and stuff like that. And so that's my why. That's why I want to get up. I want to look at the markets and I want to generate that, let me generate that money so I can then go use that money to do something fun and interesting. So who are these tools for? Day traders, if you're struggling with violent intraday swings, these levels will help you out quite a bit. If you're a 0 DTE trader, SPX, and you keep getting the levels wrong, especially with these crazy end of day moves, these levels are for you. Hint, you can also use 1 DTE and give yourself a little bit of edge that way where you're not getting killed on premium decay. Navigating the void. Why did the market just suddenly turn? Oh my gosh. Okay. A lot of times people think it's news. It's not. It's levels. Conservative traders just looking to grind out 1% a day for income. Or if you do have an 11K account and your goal is 5% a day, that's fine too. You just want to be able to establish your goals so you can establish your position size and establish your risk. That's the only reason that you do that. These are solid levels where we can do quick directional trades. Also, traders looking to fill in downtime in between the bigger moves. Trades set up in the micro voodoo lines every single day. And traders who want a clear, objective, precise levels for entries, exits, and stops. And this is how you create edge. You create edge when you're trading levels that not everyone else can see. Okay. A lot of people don't know that the micro voodoo lines exist. They do not understand why the market's turning at those points. That gives us a huge advantage. And yeah, we're fine doing this. And let's, maybe we'll probably end up selling a couple hundred copies of them. That's fine. We're totally fine with that. But this is not something that we want, plastered on all these different trading platforms and stuff like that too. This is something like, hey, we want to help out the traders in our community. Screw everybody else in a way. I mean, I wish well on everyone, but I wish mostly the people in our own community the most well. Okay, so who does not need these tools? Okay, so if you're here wondering if you should get these or not, if you're a position trader and you're holding on to things for months at a time, guess what? You do not need these. If your current intraday trading is going great and you have no frustrations, you probably don't need these. If you are looking for a 100% automated black box system, this is not what this is. Okay, this is definitely something that we watch and we make decisions on. So the idea here is what happens if you have the right strategy and tools for the current volatility that we're seeing, because you got to adapt. Clarity is power. Okay, clarity is freedom. Clarity is the ability to meet your goals. Can you see how knowing these levels every day offers an edge? Like you can wake up in the morning and you can see them, right? You know that they're there. You know that they're coming. So I think that's awesome. So the question is, like, how do you get them? How do you trade them? And then how do you learn how to maximize their potential so you can boost your own trading income? All right, so myself and David and Henry, we are all going to be doing a class on this on Saturday, a couple weeks from now, April 15th, and this will include a copy of the tool itself. So if you've got Thinkorswim or TradingView, I think there's something else that's available on. They're available for that. Now, sometimes people ask, like, well, what about E-Trade? What about Fidelity? So here's what happens is we have a lot of clients. A lot of clients are like, you know what? I got Fidelity. I'm not changing. That's fine. Download Thinkorswim. You can throw like $100 in it. They don't charge you any monthly fees. It's free. Chart on Thinkorswim and trade wherever you want. Okay, we don't care. So that's kind of the workaround for that. And then the charts on Thinkorswim are pretty awesome. So this will be Saturday, April 15th, and we're also going to do live trading so you can see how we use this tool. So the strategy class is you're going to get a copy of the tool. You're going to get the tool. And by the way, if you're a new trader, we're going to have you some resources for you there. But then we're going to tell you how we are using it. Okay. And I'm going to use it a little bit differently than David, and David might use it a little bit different than Henry, but you'll then kind of get a sense of like, okay, well, this is how these three guys use it. And I'm going to do exactly what Henry's doing, or I'm going to take a little bit of what David's doing and a little bit what John's doing. And I'm going to make a strategy that makes sense for me. Okay. And that's the idea with this. And we'll go over this, and that's the link for this. So I'll show you what that is here in a second. So what is this? All right. So what we're doing here is that now what'll happen is after the class, so the class is on April 15th. So we still got some time, right? So it's on April 15th. Now, if you order tonight, you're going to get a copy of the indicators, pretty soon. You can start using it. But after April 15th, okay, so starting on around, I guess the 16th is how that would work. What's going to happen is that the price will go up to $697 for the quick start package, and then the price will jump up to $1297 for the elite package, right? So if you're seeing this right now, you can lock this in for $497 for the quick start and then $997 for the elite. All right. So what is this? What does it mean? And good news too is if you're already a member, you actually get a discount on this too. So What the $497 right now, soon to be $697, you get. You're gonna be able to attend the strategy class. This will be recorded, so if you can't attend it live, that's fine. Most importantly, you will get a copy of the new micro voodoo line indicators. Now, one thing here with the micro voodoo line indicators, they are updated. They actually require frequent updates. So there's another bonus here for you. This normally is a $47 a month subscription. If you lock this in prior to the April 15th class, this will be waived. Okay, so that's going to save you like $550 every year for the rest of your life. So that's a huge, 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 huge thing. After April 15th, not only do the prices go up, but then you actually have to pay a subscription fee to get the updates. Okay, so hopefully that makes sense. That's a huge, we wanted to make sure we had a huge benefit for everybody here that's joining us tonight. So unlimited updates there. You'll obviously get recordings of the class. Now, if you're newer to options and you're like, what's an option? We're going to include a recording of an options 101 class. If you're newer to futures, you're like, what's a futures? We're going to include that. Now, you can just trade SPY if you want. You can trade QQQ. There's a couple of stocks like Tesla and ADI and stuff like that too. So that's not necessary. But if you're interested in that, we'll have that too. All right. So now what does the elite package include? So it includes all of this. You get all that, plus you're going to get 4 days of live trading. Now, the 4 days of live trading, why is that important? So the analogy I like with this is golf. So let's say that you're working your dream job, you're an accountant at a big 4 accounting firm, and you're trying to climb the corporate ladder, and your boss, Ted, says, hey, David, no, let's not use David's name. You're already here. Hey, Tom. Ted says, hey, Tom, Greg dropped out of the foursome for Monday. Would you like to join? Now, being an ambitious young person, you're like, you know what? I've never played golf. In your head, I've never played golf in my life, but I'm not going to miss out on this opportunity. So absolutely, I'm there. So over the weekend, you're panicked. You read 3 books on golf and you learn everything there is to know about golf, but you never swing a club. What happens? You go on that first tee. It's going to be pretty ugly. So in golf, to learn about trading golf, you actually need to swing the club and you need to learn good habits. So you can swing the club by yourself and play around, or you can swing the club with a professional so you can learn good habits right from the get-go. That's what the live trading sessions are for. You can learn good habits from people who've already been through the ringer. Okay, everything we've learned through the school of hard knocks because we've already gotten our butts kicked in the markets, and we learned like, okay, we don't want to do that again, and we don't want to do that again. So you're learning from pros. You can learn good habits from pros versus trying to find out on your own how this works. Okay. Also, too, if you don't have a copy of this, there's a hardback book, Mastering the Trade. This is like $70 on Amazon, and you will get a copy of that as well. That kind of dives into a lot of the psychology theories that I like in trading, as well as things like the squeeze and stuff like that too. And it makes a good doorstop. All right. So if you got a QR, if you want to scan this, that QR, if you're on a phone, that will also bring up the page right there. In fact, let's go and look at the sales page real quick. I'm just going to, let me click this, and I may have to switch the screen here. There we go. Yeah, let me, I'm just going to switch the screen here real quick so we can all take a look at it together. And maybe, yes. All right, here we go. Let's switch this back. Okay, so this is what the page looks like. And if you, so you'll come here and you'll kind of see, you can click that, buy the course, and it'll take you down here. So you can see a couple of important things on here, right? So first of all, there's a countdown. So the class is in 17 days, 3 hours and 35 minutes. At that point, and by the way, if you're a member, there's additional member pricing. Okay, so if you're a member, just stay logged in, and you're going to get an additional, I think it's $50 off of this one, and more than that on this one, which is pretty nice. And again, remember, if you're signing up too before the class starts, you're going to save $564 per year because we're going to waive the $47 a month membership fee to get the updates. But if you go here, just hit buy now, and that'll do it. Now, if you're not a member, I believe if you're not sure, like what do you mean a member? We have this options gold room. That's where we post the trades. I think on the thank you page, you'll get an offer for a trial, which is a good deal. And I would encourage you to check that out too, because you don't have to stay, but it's a great community, and that's where you can also learn, really learn how to utilize this stuff, right? All right, so one of the things I want you to notice on here then is that you'll notice that the regular price is $4.97 and $9.97. If you are a member and you're logged in, what's going to show up is a cheaper price, so $4.47 and $8.47. That's just a thank you for being a member. We always appreciate everybody that's in our community and want to do a couple things there, so you get a discount on this. Of course, the $47 a month fee is waived, and all that kind of great stuff. So I think that's pretty awesome. All right, so this is going to be April 15th. It'll be at 12 o'clock Central. It'll probably go for like 4.5 to 5 hours. And, again, it's going to be myself and David and Henry, and we're just going to be going through everything that we use to trade the micro Voodoo lines, either by themselves, plus with additional tools that we like to use. And we just want to share that with you. And so that'll be awesome. And with this package, of course, the quick start package, you're going to get a copy of the Voodoo lines. And we have those for Thinkorswim, TradingView, and then MotiveWave. If you're not familiar with MotiveWave, it's a pretty awesome tool for Elliott Wave. As a bonus, if you do sign up for the Elite package, you will get a copy of this big, massive book that it does. I've heard it's got some good information in it, looks good on a bookshelf, and makes a great doorstop. So all kinds of win-win-wins for that. So which is fantastic. Okay, and let's see. Yeah, I love this too. Rob is just saying, like, this is the perfect addition to my intraday setup. Looking forward to the live trading days. Thanks for spending time tonight to share. Have a great night. Yeah, awesome. I mean, I think this is, and Paul's just saying, hey, by the way, if you're not familiar with Options Gold, it's an amazing membership. We appreciate it. Yeah, and look, we're here to trade. So, I kind of half joke, like life would be a lot easier if I just traded on my own, but it's kind of a half a joke, because I think trading on your own is dangerous. If you're trading on your own, you don't have a community, you don't really have supervision. It's easy to kind of go down into a downward financial death spiral. And so I think community and trading is super important. And trading is inherently a lonely business. You are by yourself. And even if you're, married with a family, they may not really understand what the hell you're going through every day. And so that can be lonely if you don't have other traders to talk to. So I think community is vital to be a consistent trader and just a happier person. The live trading sessions right now, we're going to be doing on April 18th, April 24th, April 27th, and May 2nd. Sometimes they can change depending on what's going on, but those seem like they're pretty locked and loaded. Generally, what we do on those is we focus on the morning session. That's when we really like to do this. We can kind of hang around during some of the afternoon session, answer questions if anything else pops up, but our focused teaching time on the microphone is going to be in the morning. And then, if like a trade sets up at 11, awesome. We can post that in there as well. Typically, we just kind of, hang out and continue to answer questions and things like that. But that's how that works. And then, by the way, this is always one thing I like to let people know. We have partnered up with PayPal. And if you're thinking like, I like this, but, I'm not, I don't know. I don't want to fork out the money right now. With PayPal, we've partnered up. You can just choose the like credit level, and they will essentially give it, finance it for free for 6 months. And so we've had people who just like, they get the class, they get to finance it for free, and then they pay for the class out of their trading profits, which I love. Obviously, there's no guarantee that's going to happen, but that is kind of a cool thing. But you can, essentially it's interest free for 6 months. So that's a solid right